Hi everyone, welcome to today's morning report on Friday the 13th of March. Not a great day for luck apparently, but we'll see how the financial markets react. It's pretty slow at the moment, not a great deal going on. FTSE's flat pretty much. DAX is slightly higher, but the big feature of today that you take out is that the dollar has sort of regained some of its strength once again after a bit of a near-term blip that you would argue yesterday. It seems to be sort of regaining that strong position. Dollar index sort of broadly sideways really in the last couple of days, but across the prices the dollar is stronger against all of the forex majors. The only interesting thing that I would also say about that is that the gold price has actually rallied as well, and I'll talk about that in the price in a bit, in the gold chart a bit later. But certainly at the moment it looks like this dollar rally is just beginning to regain a little bit of momentum today. Now, that weakness that we saw on the dollar yesterday allowed Wall Street to bounce, and that bounce came after the retail sales data missed estimates, and it seems to be markets are chasing data at the moment. That weak retail sales sort of led to suggestions that perhaps the Fed may not now removed patience from its statement next week. I have a whole opinion on that. I still don't think that they're going to do it, but generally speaking I think the US data is not as strong as maybe everyone would have them believe, and I think that the Fed will not necessarily act, but we'll see about that next week. Anyway, the markets bounced. Wall Street strongly higher, 1.3% higher on the S&P 500. Slightly dragging back the VIX, interestingly, so that has just come backwards slightly, and Asian markets were up overnight in reaction to that, but as I said, European markets are fairly flat. In terms of the data that we've got to look forward to today, we're looking out for, first we've got the PPI, which is the factory gate inflation for the US at 12:30, and expected to rise 0.3% month on month. Now that comes after a negative 0.8% fall on the last month, which actually dragged the PPI yearly down to, or year on year down to negative, just slightly negative. So it would appear that the factory gate inflation is still not really that great, is it? And the month on month data is not really going to improve that at 0.3%. And then into the afternoon we've also got the Michigan sentiment. Now that is interesting because Michigan sentiment slightly came off last month. That this is the preliminary reading of 93.6 that actually got revised higher to 95.4 in the final reading. Today's reading of 95.5 is very, very, very slightly up on that final data that we saw last month, but certainly it looks like it's just holding up slightly, and maybe last month was a bit of a near-term blip. Anyway, my chart of the day is the Kiwi dollar. Now, I noticed yesterday that all of the forex majors had hit levels on the dollar, and the dollar held its support. It was very interesting, and the one I wanted to focus on today was the Kiwi dollar, because this Kiwi dollar chart, you can see here, you've got this, just zoom out to show you this crucial floor around 76 big figure, which held as resistance, and it came off sharply down, actually sort of 71.74 and that low of 71.82, so that has held as support so far. But you would now argue, zooming in, that this old resistance, which comes in around 74.40, held as support, but now has become resistance, and pretty much to the pip yesterday, that was the barrier on the upside. So you'd argue that the dollar bulls are still in control of this chart, and again today it's just coming off again. Now look on the intraday chart. Here we go. Here's that. To zoom out, you see that old resistance becomes new support, and was excellently used as the basis of resistance yesterday. Now what we've seen subsequently is that the Kiwi is just drifting slightly. Momentum indicators on the hourly chart just drifting across the RSI, MACD and stochastics. It certainly looks like that is the key level that we now need to look out for near term. 74.40, you could argue there's sort of 10 pips worth of resistance. 74.50 which was that low around there on the 5th of March. But it certainly looks like this rebound has just come across a bit of a ceiling of resistance, and it's just backing away again. Now the support that you're going to be looking out for, I think 72.85, which is this minor reaction low within the recovery, and that is probably the level or one of the levels you need to be looking out for. You could also argue that 73.20 is also that old support. There's a bit of a resistance there, and also resistance in the way higher. So maybe that will also become a level. So maybe between 72.85 and 73.20. So 35 pips worth of support there. If that starts to get broken, then I think you're going to come back towards the lows. But perhaps if that does hold, then we can start to think about possibly even this turning into a big double bottom, big base pattern. But I think we're still sort of up in the air in terms of the medium-term outlook on that, and would never even think about sort of going and calling a big bottom until certainly until this 74.40 level is taken out on the upside. So a lot still to be done in this chart. A lot of formation as well to be done. So you'd argue that the dollar bulls are still majorly in control of this. All those MACD lines on the daily chart still below neutral. RSI still falling away under 60. So definitely dollar bulls are in control, but still could well be that something's going on here. But very interesting chart, I think, on the Kiwi, and one to watch in the coming days. So I wish you good luck in your trading on Kiwi, and I will speak to you later. Thank you.